Thanks for joining us today. I'm Marlin Bohling with you. We had our export sales numbers that came out this morning. Wanted to run through those just real quickly with you here in case you missed them earlier this morning. And the corn export sales last week, 636,800 tons. And on soybeans, 876,000 tons. Both of those were just kind of okay, but they weren't overly exciting. On the wheat, we had 334,200 tons. No great shakes there. On the next page, when you get to grain sorghum and cotton and rice, well, there just wasn't much going on. In fact, the grain sorghum only 600 tons. Look at the cotton. I had to look at that 2 or 3 times to make sure that was right. A net reduction of 86,800 tons. Well, how did they come up with that, you ask? Well, we had net sales for the next marketing year of 1,000 running bales and net reductions for this marketing year of 87,800. And that was amazing to see it go backwards like that. The rice, 67,200 tons this past week. So with a cotton number like that, one has to wonder if that's putting pressure on the market. And I was looking at it here just a moment ago. Let's take a quick peek here at the cotton and see what's going on with our quotes provided by bar chart. Ouch! We have March cotton down 352 points at 84.78 today. Not that far from its low of the day. We have come off of our earlier high by almost 400 points now in that March contract. Just wanted to point that out. So a big move going on there to the downside. Meanwhile, in our grains, you have March corn down a couple of pennies. We're at 6.60 1/4. It's kind of quietly lower. Soybeans, you have the March contract down 11 1/2. We're at 14.73 per bushel. In our Chicago wheat market, the March contract is now 1 1/4 higher at 7.69. So not a lot going on there either. In Kansas City wheat, you do have the March trading 6 1/4 higher at 8.70 1/4. In spring wheat in Minneapolis, that nearby March contract is 2 3/4 higher at 9.30 1/2. So the obvious thing that stands out is the big pressure going on in the cotton market today. I want to bring in Chris Swift of Swift Trading in Nashville and talk about everything. Kind of an unusual situation today. Of course, the cotton may be reacting to the lack of export sales last week. But we have such a thin volume, don't we, this week, that it's hard to really gauge much in the market?
It really is, and we're not using any of this market activity to try to base what the next most probable moves will be on it. We just use this time frame to kind of consider what the first quarter of this year of 2023 may look like, and with the changes in the weather patterns that are starting to take effect. And right now, this great big huge cold front that's coming down through us right now is going to impact a lot of the livestock, and it won't do anything to the grain, but what it will do is probably put a little bit heavier pull on that grain market just a little bit to keep those animals fed and warm. So, we're only down 2 1/4 cents on the corn. We've been rallying pretty strong, especially into yesterday. So I think all we're really doing this morning is breathing.
Do you think corn made a turn on the chart?
It's tough to tell, Marlon. I'm hesitant to say just yet that we're going right back up again, but as I watch the energy markets push higher and knowing that grains are a portion of energy, I have to kind of believe that with China sitting in the background there, knowing that they could resurge at any given time, bringing their economy back out of the COVID restrictions, that could be a very hard pull on commodities.
Okay, we're going to take a quick pause, and then we'll come back, Chris, and we'll talk about our livestock trade. I know you have some thoughts on that. Our guest, Chris Swift of Swift Trading. We'll have more after this. Well, I'm joined by Chris Swift of Swift Trading. And Chris, you and I were talking during the break, and I'd like to continue on here with everybody else. Let's talk about the Packers schedule as we get into these abbreviated weeks ahead. Next 2 weeks are going to be short trading weeks. Of course, no trade on Monday because that's when they'll officially observe Christmas. And then the following Monday, I believe that's when they'll be officially observing New Year's Day. But what does that do from the Packers standpoint? Are they going to be shutting down? Are they going to be running odd hours? Or how do they handle that now?
I think they just slow the pace a little bit, and we've already seen that some. We saw last week where the slaughter pace had slowed just a little bit, And again, we're not having to slaughter an enormous amount of inventory for a specific event. The event is already here, and all the product has pretty much been processed into the grocery store shelves there for it. So I think what we're looking at now is probably just some meandering. Unfortunately, I probably could have used a better word, but that's all the markets are really doing is just meandering until they can find the first of the year, see kind of what the consumers pay out, or see what the consumers going to look like in his discretionary spending, and then try to move from there.
Well, if you look at the futures trade on cattle today, now, of course, the weekly export sales numbers were kind of disappointing. But on live cattle futures, with our quotes from bar chart, you have February 35 lower at 157.35. And I was checking the wire. I just don't really see any market action out in the plains yet. Just wondered if you were picking anything up on your radar today.
No, I've not heard anything, and I doubt very seriously there will be much. Transportation of animals in this kind of cold is going to be really tough on everybody, and you sure don't want to have an accident or get stuck on the road somewhere with a load of cows or pigs on there. So I don't think you're going to see much take place over the next couple of days regardless. Okay,
so we're 35 lower on February live cattle at 157.35. On the feeders, we have the March contract 12 cents higher at 185.85, so not much going on there either. On the lean hogs, they were over $4 higher on the nearby yesterday. Well, today, the February contract, after selling off for a while, is now back to 22 higher at 88.62. We're at $1.80 off of our earlier low this morning. That was a big export sales number on pork this morning. Is that helping?
Yes, absolutely it is. And we saw, like I said, yesterday was a huge move up. It hadn't really impacted the index, though. That's the one thing that we've kind of watched is the index continues to slip a little bit lower. We're now down in the $80 level for the index, and the future's still carrying quite a bit of premium. So I think over the next several weeks, it'll be interesting to see how that basis converges. Do you see the futures market on the front end start back down again, or do we see that cash market pick up just a little bit? And I'm almost a little bit in favor of seeing the cash market pick up some.
All right. Well, thanks for pointing that out. Good to hear from you, Chris. Merry Christmas to you and the family. Chris Swift of Swift Trading. He's based here in Nashville. Janet, with that, I will turn it back to you.